Hey guys, Jeff Tricoli here from Tricoli Team Real Estate here in Southeast Florida, and just been getting a lot of questions about the recent Fed rate drops here that occurred about 2 days ago. So, what does that mean in terms of purchasing a home, selling a home? How does it affect me right now? So when the rates drop like this and the Fed decides to cut the rates, does it really have an impact on the mortgage rates, and what does that look like, and where has that been going? So the answer is kind of yes and no. So the Fed cuts affect more short-term rates, not the long-term rates. There's so many factors going in. So number one, they cut the rates because of unemployment. So we're starting to see the unemployment numbers go up, which is not a good thing. So the Feds cut the rates. But on the other sense, we're seeing inflation higher than that 2% that they want to see. So with inflation high, they typically want to raise the rates to cut spending, and they don't want to see consumers spend as much, so that's why they increase the rates. So there's kind of a contradiction there. So inflation is up, but unemployment doesn't look good. So they decided to drop the rate. Does that immediate affect mortgage rates? No, not necessarily. So what we've actually seen with mortgage rates in the past 2 days, they've actually went up a little bit, because I think that anticipation of the Fed's cutting rates, we've already seen that factored into mortgage rates. So the mortgage rates were kind of at a 1-year low just a few days ago. And then now that they've actually made it official and they've cut Fed rates, it actually went up a little bit. And that's also in part because the mortgage rates are more tied to the treasury yield, which is a 10-year treasury yield or a longer term investment backed. So how are mortgage rates determined? So basically, mortgage rates are not determined directly by that Fed increase or decrease. They're more determined by economic factors and investor sentiment in the secondary market. So particularly the 10-year treasury yield or longer term type of investments. And this can be influenced by inflation, the overall economy, and just Federal Reserve policies. And then when it comes to your individual rate, that's more determined by credit, down payment size, loan to value, and all those sort of things. So if you want to get more into what your rate is at this particular time, give us a call. We'd love to discuss that with you. And then a lot of people are asking, well, what are the rate cuts mean now for the mortgage rates? And because it was already anticipated and kind of knowing that the Feds were going to probably cut rates, it's already factored into those mortgage rates, which is why we've seen them dip a little bit. And now we've seen it kind of go back up a tad bit. But still, they're still relatively low over the past year. We were in the 7s almost a year ago. Now we're in the mid to low 6s. So I do think it's a great time to list and sell a home, because we are seeing more buyers in the market now that the interest rates are now in the low to mid 6s. And it's never a bad time to buy real estate, especially here in Southeast Florida where so many people want to live. So again, the Fed cut doesn't guarantee a big drop in mortgage rates immediately. Mortgage lenders look at longer term factors, inflation, bond yields, and all these other factors. So just be patient, but also realize that if you're looking to buy or sell a home, it's never a bad time to make that decision. And if you'd want more information on is now a good time for you and your family, give us a call, reach out to us. We'd love to have a consultation with you. And again, this is Jeff Tricoli of the Tricoli team, and we look forward to speaking with you soon.